I want to take a look at the chart, the daily chart of spot gold, as it's setting itself up neatly for a double top formation. But of course, double tops are an often used phrase and it's often misused, and there can be a number of other factors that it might actually develop into. And of course, we've got a lot of fundamental backdrop, which points potentially to money going back into gold at some time over the summer, if there is an emptying out of the equity markets, which some, of course, have been speculating for some time now as to might happen. And that will be positive for gold. But in the meantime, let's take a look at this chart because it's setting itself up neatly for this double top formation. I've already drawn some lines on here, and you can see this dotted line here that I've drawn, this purple line, taking us into what is the beginning of this double top pattern. There's the first peak, but it's when it retraces down to there that you can start drawing this out. And this coincides neatly with some other points at which the price of gold has bounced off, both as a support point and also a resistance point as well. But let's take a look at what we got here in terms of the move that we've seen. The high that we saw scored back on the 17th of April. This point here at just below 1300. It then retraced back to this point here where it starts to develop. It went back to test that high again, and the MACD, there's been a bit of negative divergence here, which is something that quite often happens in a double top formation. You're also getting what is slightly lower volumes on this second peak here, which actually is not on this chart here, but that's what happened for gold at that point. We got this pullback here. It's disappeared below the 50 and the 100-day moving average. Today we got another decline here. We are at almost 9 o'clock in the morning on Monday, the first trading day of the third quarter. And it's looking as though gold is trying to attempt to come back down here. Now, if there is a completion of this and it disappears below this support line here, which is at 1216 or around about that sort of level. The way to then develop this and to potentially make money out of this is to measure the distance between the top and the bottom, and then take that line and then project that down, copy that, and then project it down from wherever you are on the price of gold. And in fact, if we do a little bit of a calculation, or rather we look at the trends on here, that neatly forms around about the sort of low that we had back on the 20th of December when gold was at $1,128 an ounce. So that would take us back nicely to the low point there, potentially for gold, if this double top here does develop. As I said, it's a much overused phrase and sometimes it doesn't develop into anything, but keep an eye on this as a potential trade for gold. If you go short here, if you do want to trade this, and you obviously want to put a stop on. You want to be putting a stop on just a little bit above where that top is, at just over the 1300 level, to give you some insurance in case there is a pullback. If you're not that happy with that much risk, you'd be looking potentially at putting a stop on at around about this sort of level here, just above this level here, which is again a point where we've seen some resistance on the upside. That's at 1260. You'd be looking to put your stop on a short trade at around about the 1270 level, just above where we are on that level. That would give you some sort of a protection on a short trade on gold, which at the moment at least looking keen, bearing in mind we've got this developing double top pattern.